Okay, I'm doing something radical, and I don't recommend doing this ever unless you are trying to pass quickly an Apex account that is about to expire and renew. I'm going to hedge copy. Hedge copying is where you're hedging one side long, one side short, two different instruments that are kind of correlated. So in this case, the MNQ I'm long, and the MES I am short. And I'm copy pasting 4 accounts on both sides. Okay, and this is for the FOMC announcement, what's going to happen. I'm experimenting, and I hope at least half of these do well and prosper and get closer to passing. That's the goal, because all these accounts are going to renew soon in the next couple of days. So if they're blown, they're just going to be renewed. And I don't recommend thinking like that and trying to pass like that. It's just there are times of the month that that's affordable, and times the rest of the time you should be training and practicing a new kind of strategy, a real trading system that works for you. But anyway, I'll let you know how it all goes. Okay, we are hedging 6, 7, 8 accounts, 4 on each side. The top 2 accounts that you're looking at the top are just 1 account each. Where I'm long the MNQ micro and I'm short the MES micro, just 1 each, and 1 account each at the top here. Now at the bottom, I have 3 accounts that are long that are copy pasted together, 2 micros, 3 accounts. And over here, I'm short the MES, which is a different instrument. I'm short 3 micros with 3 accounts. So 3 accounts each, 2 different instruments, and also the imbalance on the position size. 2 micros long MNQ, 3 micros short MES. I hope that makes sense. And we're waiting for the FOMC announcement to take place. So I have 8 accounts at risk. But as practice and theory go, and experience, they're in opposite directions. So what that means, they should move correlated in the same direction. I'm not sure how that's going to work. I've never done this before in terms of the FOMC, but I have traded hedging these two, and generally they move, but they do often have divergence. Divergence is where, you know, you can get hurt or make money. So we'll see how this goes, and hopefully at least 4 of them, if not all of them, will be profitable in some way, shape, or form, and we'll let you know how everything turns out here shortly. And this is to be expected. What we have is you're going to have half of them green, and you're going to have half of them, you know, red, because you're hedging, and if they go in the same direction, roughly correlated slightly in the same direction, then one side's going to lose, the other side's going to win. All right, you can see my rationale here. You can see now we're in a situation where this is up like $71 on 4 accounts, or wait a minute, that's just one. What's the bottom doing? Up $90 on 3 accounts. So all the accounts are up almost $100. Over here, 4 accounts are almost down $100, right? And the point is that if we make $1,000 in 4 of these accounts and lose $1,000, that's reasonable because we haven't blown them for one, and we'll pass one, two. We'll get them so close to passing some of these, only a couple $100 away, that it's worth the risk. The ones that you lose $1,000 on, as long as they don't go below 50 or below your threshold, they're still valid accounts and they're still active. Okay, this is kind of hilarious. Now we're actually pulling ahead profitably on the long side. It was just break even again, except reversed. We were 100 short, 100 long, $100 long positive, and $100 loss a minute ago. Now we were $100 positive, $100 loss, except the account switched. And now things are starting to take off to the bull side, which is what I'm hoping. And I'd like to get as close to as much as possible, to be honest with you. If this thing were to somehow run hundreds of points and I get, you know, I got 2 micros, I'd like to get anywhere from 500 to as high as possible. If I can get $500, that'd be great on the positive side, because then you're not really losing too much on the negative side. It's a manageable loss, and you can continue to manipulate and use that account for positive things in the future. Here is the announcement. Did it hit me? What happened? Order filled. I heard order filled. Oh, it hit that? It hit that already? Whoa, it hit my target already, which is throwing me off a little bit here. Those two are still going. Oh, it hit my target already. I had my target too close on the long side down here. These three accounts hit my target pretty quickly. And the other... Okay, I had to pause it for a second because I couldn't think straight. And I just wanted to look at what's going on here. It was so wild to have happen. Let's see, this $800 positive is more than this $700 here, about the same as, almost the same as these are negative. So all these cancel themselves out to basically break even, Now, the top part, however, is all green, right? So these accounts almost break even down here. These are positive. Let's see how much positive they are according to the statistics. Well, according to statistics, we did $861. That's after everything breaks even and everything. I like that. That's pretty cool. It could have went wrong. We did a lot of trading before this, so this counts last night's hedging trade, counts some trading I did before FOMC. I closed all those trades out and put on all the copy paste trades. Technically, just the copy paste trades. I wonder how much did. That's what I need to check real quick. Well, it's profitable anyway. The whole day is. And here's the thing. I'm going to take some of the red accounts now. There's two of them that had massive red days. Out of these two that are red right here, this one and this one, 500, 600, I'm going to try to see if I can trade that to be more green or less red, try to make some money back in that. Without hedging, I could possibly try to hedge. But on the daily chart, I'm assuming, and this could be a terrible mistake, but there's a consolidation pattern going on right here. And I'm thinking it's going to at least hold with all these moving averages right here today. I think it'll hold today. So I think today it could just come crashing straight down and just completely turn red. And I don't know, but I'm assuming that it's going to hold tight here. And I'm going to try to make those accounts turn a little bit less red or even possibly green. I'm not sure what'll happen here. So I'm long on account 8 and account 24 here. Let's see. I'm long 2 micros right here. We're already up 70, 60, $70, and that's helping. I was going to hold this one and not get long on it yet until if it keeps coming down. I would have added later to that one. These are not copy pasted at the moment. Okay, I have decided to hedge, but only after this side profited so much, $110, $115. Then I threw on some shorts over here in case that side crashes down. What'll happen? Oh, I'll be long on that side, short on this side with $100 profit already as a cushion in between the two. So that's very, very interesting. Let's see what happens. Now I'm hedging these two lost accounts against one another, maybe get a positive net value out of it. For instance, this one's positive 106 and this one's only down 60. So that's $40 decrease in the overall net loss of what's taking place. Something like that. Now I'm almost $100 even on this thing. It's pretty wild that it's moving around. Just trying to continuously trade the hedge and balance out the losses and reduce the losses on that. See, now it's shooting back up and we're up about 250 and down about 200, so that's a positive value of 500. I'm just going to keep letting it play because I'm still new to this and I'm still curious to observe all the possible ways price action moves. I'm going to end the video here and we'll see you on the next video while I just let this play out for the rest of the day. Take care, everybody. Peace.